What's up, guys? Today we'll be answering what to do as a buyer or seller in a real estate market that's already topped and trending down. We'll be analyzing it through the data from the October 2022 Oahu monthly stats that just dropped yesterday. I know, a lot of you may be thinking that buying is crazy in this market. With articles like this, it's really not a stretch to come to that conclusion, but sometimes you need to push past the puff pieces to see where the opportunities lie, and that's my goal today. Cold, hard facts to take home with you to make the best decisions regarding your real estate future. As this is a series, Stats Don't Lie, we'll be building on some of the information we went over from previous videos. You can check out the September update for both the overall market and neighborhood updates here and here. But I do need to state the disclaimer that this is not financial advice and simply my own thoughts from looking at the data. Now, in last month's update, the two major takeaways was regarding macroeconomic factors and the overall trend of the market that will impact prices. First, let's look at those macro factors. Interest rates have continued to rise due to higher prints in core CPI, GDP, unemployment, jobs, and other data points. Now, in short, the economy is still running very hot, and a more restrictive policy is needed to bring inflation down. You can see that in the Fed chairman Jerome Powell's recent comments a week ago at the FOMC press conference here.
The level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. We're exactly where we were a year ago. I would also say it's premature to discuss pausing. It's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go.
Take a close look at the impact on interest rates on the exact day he spoke, and it says only one thing. He's eyeing your girl. Lower interest rates and making a play. It outlines a probable outcome I noted last month and highlighted here. Secondly, let's recap the market trends. For single-family homes, lower demand and higher total inventory means lower prices. And for condos, lower demand and flat total inventory means much more neutral prices. Let's compare it to how the actual prices adjusted this month. Interesting, interesting, interesting. You see here that for single-family market that the prices actually came down while condos went up. Now, the leading indicators say that the trend of the supply greater than the demand is still the case, outpacing for both market segments 2-1 and continuing the trend year over year. What that means for prices is that they will continue to trend down and more than likely start to stabilize once interest rates flatten. That probably will occur in the next 3 to 6 months. Now, for you buyers watching this, probably thinking to yourself one of three things. Market's going to crash. I'll wait until the market bottoms. Real estate is a bad investment. And if the real estate market on Oahu looked like this, I probably would agree with you. But the Vegas market isn't the Oahu market, and you can clearly see that here. So let's add up three facts that proves why calling bottom for an actual buyer is right now. 1. Price is a 2 to 4 month lagging indicator due to the time it takes from market list to sold. 2. Prices are already reflecting a significant decrease to the tune of nearly 10% from the market peak. And 3. Buyers take typically 6 to 9 months from market start to closing. Everything with real estate takes longer than you think. Heck, success is taking way longer than I think. So please like, subscribe, and share my content if you're enjoying this today. And if you want to be successful, you're going to have to get started before you think you're ready. Now, you'll also want to get creative with both the offer itself and the financing for the property to offset a significantly higher monthly payment. 2-to-1 and 3-to-1 buy downs with adjustable rate mortgages are all the rage now. But is it right for you? We'll go over that in a later video, but please contact me for a personal consultation. Sellers, thank you for waiting, and here's your spotlight. The 3 tips are summarized in my latest Reel Now, and let's break it down. 1, price it to move. Price is where the demand is now, not where it was. The worst thing you can do is chase those prices, as it puts you on the back foot. What's the difference between this listing and this listing? Well, the second one is mine, of course, but it's the pricing strategy. Pricing well leads to high demand, multiple offers, and a higher offer than you would originally get. 2, make your property sparkle. When you boil it down, selling a home is simple. Get the buyers in the door, have them fall in love, and then they'll write you the offer. You miss any of those steps, and in this market, you're unfortunately out of luck and out of offers. 3, have a listing agent that will show up. I'm not kidding. The majority of listings I show, my buyer clients are all on lockbox, and this is now the industry standard. But doesn't buyer agent know how to sell your property to their buyer? Would you leave the fate of $1 million in the hands of a stranger? I'm just saying, I do every showing because my job is to sell your property. Thank you so much for joining me today. I'll be covering the neighborhood update in a few weeks, and moving forward will be an ongoing monthly series. If you like the content, want to follow me on my journey, or just need some real estate assistance, whether it leads to buying or selling, please subscribe, reach out, and let's get it and be successful together.